Hello and welcome to the FATCA discussion, what we've learned, where are we now, where are we going. My name is Lawrence Kiddle, Commercial Director for FATCA at Thomson Reuters, and I'm your host for this session, and thank you very much for joining us. For those of you who took on FATCA responsibilities maybe 2 years ago, I think the world looked very different. While there are many unknowns, we were dealing with a single set of regulations and reporting to a single tax authority. Then, February 2012, we saw the introduction of the Intergovernmental Agreement concept. A year after that, January 2013, we saw the IRS bringing out the final regulations. And 6 months later, the US Treasury announced a 6-month delay to the FATCA onboarding process. More recently, we've seen a notice giving financial institutions further guidance to implement the compliance programs. We see many countries entering into intergovernmental agreements, the UK government introducing a son of FATCA regime with many offshore centres, and the OECD moving ahead with their automatic exchange of information programme. So in this webinar, we will cover what we've learned in the last 2 years of FATCA implementation programmes, some of the FATCA pain points as onboarding deadlines loom, and crucially how we can begin to deal with them, and where FATCA and information exchange may take us in the next 2 years. We're fortunate today to be joined by a very strong panel. It includes views from in-house FATCA programs and advisors on both sides of the Atlantic. So let me introduce them now. First panelist is Tom Shave, a director in Deloitte's financial services team based in London. Tom's led a number of FATCA engagements for a number of multinational financial institutions, both UK and in Europe. He sits on the HMRC working groups considering the implementation of FATCA in the UK and on the OECD working groups on automatic exchange of information. Second panelist is Jean-François Pournet, Head of FATCA Projects at Amundi. He also has worldwide responsibility for databases and sponsors Legal Entity Identifier project. He's held various industry representative roles and previously held positions as Head of Legal and Compliance in various Tier 1 financial institutions. And we are also joined by Stanley Foodman, CEO of Foodman CPAs and Advisors. Mr. Foodman specialises in international and domestic tax matters, including international compliance and tax controversies with the IRS. Foodman CPAs and Advisors represent individuals and businesses around the world, including the USA, Latin America, Europe and the Middle East. Before we begin, just 2 housekeeping announcements. If you're experiencing any difficulties, please contact us on the chat facility. We'll do our best to assist you. And telephone dial-in access is available for the webinar through the telephone icon under the panelist panel with the dial-in details. To give a quick view of the agenda for our session today, each of the panellists will give a short presentation, after which we'll move to a roundtable discussion. If you have questions for the panel for the roundtable discussion, please type them into the Q&A facility at any point in the webinar and address the questions to all panellists, and we'll do our very best to pick that up before the end of the session. We'll also ask 6 polling questions as we go through the webinar. These will help give a benchmark on where different businesses are with their FATCA compliance processes, and also give a view on the challenges that your peers are dealing with, and also help us to make the discussion relevant for most of the issues that you are facing today. We'll ask the first 3 polling questions before we begin the presentations, and just if you haven't done the polling questions for the webinar before, they'll appear on the screen together with multiple choice options, and it's simply a case of selecting the option that is most relevant for your circumstance. So let's have a look at the first question. First question is, how much does your organisation expect to spend on its FATCA compliance programme? And we give 5 options there, so please select the one you feel most relevant to your business. And you have a few seconds to go through that. Okay, and we'll see the answers for that question appearing on screen shortly. And as I say, we'll use that as a guide perhaps to some of the conversations as we go through the rest of the webinar. The second question Do you expect your organisation to be FATCA compliant by the 1st of July of this year? And again, we're looking to 4 options there. So between yes, everything's on track, probably, but there still remains a lot to do, probably not, and a simple no, we think the deadline's too onerous. So it'll be interesting, I think, to see different reactions from the webinar attendees there as well. And again, we'll just go through a few seconds for answers and responses to that question.
There we go.
Okay, I think we just got answers coming through from those at the moment. So I think just picking up some of these, which we'll go through as we go through the rest of the session. Most respondents in the sub $100,000 for FATCA compliance. I think there's overwhelming optimism that most people will be in the main or absolutely ready. And I think the key concern appears to be over a lack of clarity in the IRS regulations. So I think perhaps those are themes that we'll return to as the webinar continues. Now, let me hand over to Tom Shave for a view from Deloitte as to how FATCA's evolved and where perhaps it's going to. So, Tom, the floor is yours.
Thanks, Lawrence, and good afternoon to everyone. What I wanted to do today is just go through a bit more detail around where we are in terms of regulatory update, both from a US perspective, but also more generally around the IGAs, and looking further ahead to the G20 and OECD developments that many of you will be aware of. So firstly, from a US perspective, although Lawrence referred to the final US regs being released last year, the US have said, and the IRS have said, they're going to be releasing a final version, and they're expecting those in the next few weeks. In addition, the UK guidance, which is implementing the IGA in the UK, will be also being released further final guidance towards the end of February. The reason that is important is because the UK is almost the furthest ahead in terms of the implementation of the IGA. So that guidance is really being used as a proxy by other jurisdictions who have perhaps signed an IGA or expecting to sign an IGA, but don't have local regulations or guidance yet. More generally, there's about 20 IGAs that have been signed and a number more initialed, and we're expecting a steady stream of those to be signed over the coming months. And that is one of the key areas of uncertainty that was highlighted in one of the earlier questions, particularly given the registration deadline of the 25th of April. Most jurisdictions have now established FATCA working groups to look at both the policy type issues, but also some of the IT technical elements about reporting and the format for that. And I think we'll continue to see releases on guidance from those different jurisdictions as IGAs are signed. From a UK perspective, the UK was one of the first jurisdictions to actually implement the next level of regulation and building on US FATCA, which is colloquially being called Son of FATCA or UK FATCA, whereby they've implemented their own agreements between the UK and the Crown dependencies, so that includes the likes of Jersey, Guernsey, the Isle of Man, and also their overseas territories, so the likes of Cayman, Bermuda, and BVI, etc. So organisations that have operations in those jurisdictions will now not only have to comply with US FATCA, but also UK FATCA and report on two or more sets of customers or investors. The timeline for the implementation of UK FATCA also is aligned with US FATCA. Looking further ahead, we've also seen the G20 make a number of announcements next year that they want to introduce a model of multilateral information exchange, and that framework is currently being developed. There are a couple of different elements to that, and again we're expecting further announcements in February around the format that might take. One of the elements and looking at potentially the format of signing what they're calling a common authority agreement and a competent authority agreement and a common reporting scheme across those different jurisdictions. So looking 2 to 3 years down the line, we expect that institutions will have to report not only on US, UK individuals, but many more. And as we see, there's over 40 countries have committed to that agenda. So just moving to the next slide. As I said earlier, there are 2 key elements to this model or multilateral exchange agreement, which we're expecting to see released publicly next month. Firstly, the competent authority agreement, which is dealing with the rules around the exchange of information and the due diligence, very similar to the intergovernmental agreements. How is actually the information going to be shared? And then the common reporting standard, the CRS, which actually outlines the information that will be reported by FIs. They've used many of the same definitions as under FATCA, so the definition of financial institution, financial account, etc., new and pre-existing account holders, and the due diligence obligations that are associated with those. The timeline for this OECD model is effectively FATCA +1, so we expect it to go live in 1 July 2015. So really many of the institutions we see that we're working with now are looking at future-proofing. What are some of the elements that they can undertake that they're doing for FATCA that can actually be introduced to cover off these future elements? Just moving to the next slide. What should organisations really be focusing on at the moment? This slide just sets out some of the key priorities that we would see financial institutions focusing on. Firstly, registration. As I mentioned earlier, the first key deadline that is approaching is the 25th of April, and by that date, everyone needs to have registered their financial institutions, which is on an entity-by-entity basis, with the IRS, and in order to appear on the first list that the IRS is going to release of compliant financial institutions on the 2nd of June 2014. Secondly, onboarding. Many institutions are currently focusing on the updates they need to make to their onboarding processes to be compliant for 1 July 2014. And much of that is to do with new documentation, the updated W8s, W9s we're still waiting from the IRS. But given some of the future-proofing, people are looking at other similar agreed forms, and I'll come back to that. Governance, given the different arms that FATCA touches on, it's important that a strong governance framework is put in place and responsible officer obligations that go with that. Communications and training. We're seeing many organisations now looking at their external comms as we start to go through the process of due diligence, and training staff internally, perhaps using e-learning modules as well to make sure people are aware of their obligations. Finally, the pre-existing account remediation is less of a priority, but is starting to get some focus given the pre-existing account population that will need to be remediated after 30th of June 2014. Just one area that I just wanted to focus on this webinar was around the practical considerations of documentation. And many organisations are considering what they should do around this. Historically, the IRS forms, the W8Ns, W9s have been used to document account holders. However, they are very US-centric, and so some organisations are now saying that they need to introduce similar agreed forms or look for an industry standard about what forms that they can capture. And that's partly because they need to obtain elements like tax residency, which is much more general than just a US-centric focus. We're seeing a number of institutions and associations potentially looking at what type of form that they could use. And I think this will become increasingly prevalent given the direction of travel that I've talked through with the OECD and G20. That's something to reflect on perhaps, and I'd now like to pass over to Jean-François to talk through his presentation.
project and to let you understand what concretely Amundi wants to do around the FATCA issue. So first, let me just show you a last overview of Amundi. So, as perhaps you know, Amundi is a global asset manager. That means, in a FATCA way, we are in 30 countries all over the world. So that means we will be impacted by many IGA, which is IGA Model 1 or IGA Model 2, and FATCA rules 2. So, in terms of customer, we have a network, many networks of clients, so indirect customer via banks and others, and we have other institutional clients which are direct clients. Why I want here to precise that point, that our obligation are not necessarily the same between the network clients and institutional clients. So I want here to share with you a real internal document we have made with all and share with all our entities. So we call that the top 10 of Amundi assumptions. So we want just here to give some key to our subsidiaries and our FATCA working group to understand what we have to do and what's the timeline of things. So, first of all, we are part of the group of Crédit Agricole because it's our shareholder for 75%. So we need to have the EAG number of Crédit Agricole SA, which is done by the central project team. Second, we have to registering Amundi Group entity. So it will be done by Amundi Paris itself for all over the world, and the status will be validated by every entity, but proposed by the Central Tax Department. For status, firstly, all the management company will be registered as reporting Model 1 for AGA country, or a participating FI for out of IGA or AGA Model 2, and they'll get their own gene. Secondly, the management company will be registered as sponsoring entity, so to sponsor every fund they have. For the status of funds, we have decided that for except specific case, all funds are investment entities and financial institutions under FATCA obligation, and they will be registered during the period. And all funds will be declared as sponsored entities. Then the fund, after a period of time, will be gradually registered itself as the OG. We begin the, in fact, we have begun the due diligence with a new KYC process. We know that every needs are not fully determined, but we begin that for new accounts, and for pre-existing accounts we start backloading things. For US person on the point 7, we clearly don't want to exclude US person due to FATCA, except perhaps in Luxembourg, because for a long time ago we decided to not have US person of Luxembourg funds, so we keep that rule on. Third party and transfer agent, but globally I will say, for every third party we have all over the world, we want to have only a third party compliant with FATCA. We don't want to work anymore with counterparty which are not compliant to FATCA. That means that there will probably exception. We can imagine that for Sharia fund or some kind of fund with a specific broker, it could be non-compliant, but that those exceptions have to be agreed by the head of trading table, Christophe Kiefer, and myself. For all distributors, we decided to have a compliant distributor too. And for that, we will ensure that they have a GN and they are registered, and we move all the distribution agreement. For the distribution transformation contract, systematically, they will be validated by the legal department, but centralized in Luxembourg for distribution. On the point 10, we decided to use the platform of Thomson Reuters, in fact, for fulfill a new 888-BANE-E, due to the fact we are not allowed to provide tax advice, but we know that we can facilitate the life of our customer by providing a kind of solution, a web solution, in fact. So, perhaps just more explanation around the status we decided to have. Why taking a reporting status and not a deemed compliance status? We think that status is clear, comprehensible, and unique for all entities. That's very important for us. That's the unicity of our decision. It really facilitates the process of mass because we are 40 companies and 2,500 funds. So we cannot imagine make a fund-by-fund decision. This status is very easy to explain for sales team because we cannot imagine that salespeople have to manage the status of their customer against the status of the fund. So with one unique status for fund, it will be easily applicable for the sales team. And it avoids any exclusion of American customers directly. And why a solution, what I said for 888-BANE-E? Yeah, first, it can allow us to have a centralization asset position because, as you all know, we move from a 2-pages formula to a 14-pages formula, but only 7 have to be fulfilled. And it could be give trouble to our entity all over the world because we have to fulfill it in Asia, in the US, in Europe, in France, in the United Kingdom, etc. So it could be difficult. So we decided to centralize that production. And as explained just before, as we cannot be tax advisor for our customer, it allows us to give a guide for filing the 888 for our customer because we have many retirement institutions or other small institutions who don't know really how does it work for the US formula. And, of course, that really facilitates the mass production. Another point we think is very important for an asset management company is to providing the information of the fact we are FATCA compliant and that our fund is FATCA compliant. So how we will do that? We will use information platform very used by our counterparts like DTCC, Market, and Reuters to show and to give all information as we done for KYC process last year around all our funds, as also 2,500 funds. And as usual, the mass process is very important for us. So I'll let you move to the next slideshow.
Good morning to all, or for you it's the afternoon. I'm Stanley Foodman, and I've been asked to deal with the challenges and industry concerns for the Caribbean and the American region. If somebody could move me to the next slide, I would appreciate it. What is it? I'm not moving over here. Okay, so we've been asked to work on the Caribbean and the Americas and the Latin American regions and the U.S. banks, and so we're going to do that. So we're going to start with Caribbean and Latin America and what the key challenges and concerns are that we've been encountering. We represent a variety of financial institutions in Latin America, some in the Caribbean, and these are the things that we've been observing and that we're seeing. First of all, senior management of foreign financial institutions in the region, in many instances, are waiting for FATCA to go away or be delayed again in its implementation. Secondly, there seems to have been a lack of financial implementation budgeting in the entire region, with certain exceptions. There are legal conflicts with local laws regarding confidentiality and retentions. In some places, waivers cannot be obtained, and in other countries, in other localities, retentions are prohibited by local law. Finally, their U.S. correspondent banks are not yet providing them with the information that they need to determine what retention policies will be at those institutions. Lastly, they're frightened of reciprocity and potential security issues on the reciprocity. With respect to what our panorama is for FATCA implementation for the Caribbean and Latin America, the slide shows who have signed IGAs, which countries are expected to sign IGAs in the region, who are expected to directly participate, the two major countries where legal conflicts still exist, and what we call all quiet on the front, which is they're not really saying much of anything. And so we know that IGA 1s have been signed for Mexico, Costa Rica, and the Cayman Islands. Bermuda is a Model 2 reporting country, and we expect other countries to be signing IGA 1s. There are other countries such as Guatemala, Honduras, etc., in the third column where they're having, for internal reasons, it looks like they're not yet going to be able to make a deadline for an IGA 1 for the first GIN lists. And in Venezuela, in particular, in El Salvador, there are issues with confidentiality and withholding, and also with the paying over of funds to the U.S. that are presenting local problems. Argentina has been relatively quiet, although we have been approached by local institutions who will probably directly participate, and we're getting little or no information directly from the Caribbean. What are key challenges and concerns for U.S. banks? So, to withhold or not to withhold, a reason to know whether or not there should be withholding. The withholdable payment scenario isn't completely crystal clear, although a lot of U.S. banks are saying they're only going to withhold on their own FD/AP generations from their own institutions. And, of course, the issues of scanning of outgoing payments against the GIN list is creating its own IT issues on this side. Therefore, they're saying they are not ready. They are asking for a delay in many cases, and some of the larger institutions are really pressuring to do that. There are reciprocal reporting questions which were brought up in the first part of this. We're dealing with tracking residents and local tax ID numbers in other countries, and the intention by the U.S. Treasury, which is in the IGA 1A, to provide full reciprocity. Also, there is the issue of what we call hybrid institutions, which are U.S. branches of foreign financial institutions, which have the issues of having to report as part of an EAG, and also having to possibly withhold as a U.S. financial institution, in some cases possibly in situations that it could affect their home offices. So these are the things that we're running into over here. And I'm going to turn it back to Lawrence to proceed from there.
Excellent. So thank you, Stanley. Thank you also to Jean-Francois and to Tom for what I thought were excellent and thought-provoking sessions there. I think particularly given the geographic spread we had, with Tom looking to the OECD European perspective, Jean-Francois talking through the very practical issues around a FATCA program and how to overcome them. and Stanley's view perhaps from the other side of the Atlantic, perhaps a sunnier and warmer side to the one that we're experiencing in London at the moment, certainly. But a very good view, I think, of some of the challenges that sit over there. We're going to have a slight change of pace and move to a panel discussion, picking up on many of the questions and issues that have been raised as we've gone through the webinar. So thank you very much for everything that's come through from the chat facility. Some excellent questions, which I think we're going to begin addressing. Just before we do, however, we're going to dip back into the polling and ask 3 further questions around different elements of the FATCA compliance process. And I think, again, we've got a couple of minutes to work through these. First question, I think, actually picks up on one that we raised in a previous webinar around 4 or 5 months ago, and picks up both on Tom's presentation and I think some of the issues that Jean-Francois raised as well about W8s. Do they remain the gold standard, or should we be looking elsewhere? And I think what we'll do after the webinar as well is just do a comparison of what we've had through this question now compared to 6 months ago, whereas 6 months back there was a very heavy focus on W8s for want of anything else that was out there. I think we're seeing a slight change in focus, and it'll be interesting to get, I think, panel views on that as we go through. So we'll just allow that a few more seconds to close, and then I think we'll move straight on to the final 2 polling questions as well. Also looking at different aspects of the FATCA process and around how we actually go through and perhaps future-proof some elements of that process as well. So we should see the results coming through for the W8s now. And we should just see those before we move through to the next set of questions. Okay, interesting results there, actually. I think we're seeing, similar to previously, overwhelmingly focused on the W8 forms, but I think the not sure has gone down. I think we had that about 35% last time. We're now down to 20, so perhaps more clarity is coming through. Let's just see if we can move to the next set of polling questions as well before we kick into the panel discussion. And the questions that we'll be asking here. So again, pick as many options as you like for what you think will happen in the future. Always nice to indulge in a bit of crystal ball speculation. Do we think there'll be another delay? Do we think the OECD is serious about kicking off in 2015? Will the OECD exchange of information actually supersede FATCA? I think let's see where we go with that. And the final question, I think, is on future-proofing. So, as Tom pointed out, and as we mentioned earlier, FATCA is not just FATCA. It covers many other countries as well now. How easy is it going to be to flex what you're doing? And I think Jean-Francois gave some excellent examples of how businesses are currently working. But how easy is that to extend to the multilateral OECD-type exchange of information as well as a pure FATCA process? I think while we wait for those results to come through, let's actually kick off into the panel questions, I think, as well. I think we'll actually pick up with a fairly obvious one that's come out from previously. I think, Tom, I'll probably address this first one to you, in the first instance at least. There has been speculation there may be a future delay to FATCA onboarding deadlines. How serious do you think this is? And do you think perhaps the US Treasury will announce a third delay to the regulation?
Yes.
Tom, what do you think?
I think it's a good question, and a question that we get asked in pretty much every meeting we go to at the moment. There's a lot of, before Christmas, there was a lot of lobbying in the US, particularly around a delay, a 6-month delay to take the start from 1 July through to 1 January 2015. However, there has been recent speculation from the US government that there will be no delay, though these rumours continue to persist. What we have been seeing is that the noises are that the final US regulations will come out very shortly, and I think it's at that point that we'll know whether there will be a delay. If you'd asked me before Christmas, I think I would have said that it's quite likely. I think given some of the messages that have come out, that's receded a little bit. In addition, one of the pressures might be that there are not enough IGAs signed, given that the US was aiming for 75 IGAs to be signed, and as I said earlier, there are only about 20 at the moment. And on top of that, other countries haven't actually released guidance, so that will continue to put pressure. So I still think it is quite a possibility that there will be a delay, but by no means certain. And therefore, I think, given that we're 5 months away, institutions really do need to start focusing on the key priority areas of registration and onboarding, and at least have plans in place to implement those, because irrespective of anything else, FATCA is going to come in at some point.
Interesting, thanks, Tom. Let's push that from an industry perspective from Jean-Francois, perhaps, and the survey results we've had in, 54% of the responses on the call think there may be another delay. Jean-Francois, is that something you planned for at Amundi, or are you full steam ahead for 1 July now?
To be ready for the 1st of July. I have no plan for a delay. I know that's very important to have time to implement, and I can't say anything else, but in terms of budget, it's a nightmare, because more delay we have, more cost we have, in fact, for the moment in the implementation. And it's very difficult to focus our board around that issue if there's delay. That's my key point as an asset management company today.
Excellent, thanks. And Stanley, what's your sense, being maybe closer to the action in the US than we certainly are in London today?
Well, there was recently a large international tax conference in Miami this past week, in which the IRS made it very clear that the IRS representatives who were at this particular conference made it pretty clear that they don't intend, or they don't see any delays on their side with respect to being ready. Now, from the other side of it, the U.S. financial institutions are asking for a delay specifically for being able to implement the withholding issues because of they're not being ready with their IT solutions and their internal HR solutions to this problem. IRS has not indicated on this side that we know of any intention of delaying anything. And so we're telling our clients and the people that ask us to just go full bore ahead as if there's going to be no delay. On the U.S. side, we're talking to U.S. institutions in the local area, and we're telling them that they need to really be pushing forward with their IT solutions and their training internally for their staff to make this go forward.
That's interesting, and I think, looking broadly in Europe, that's very similar to what we see here, that there may be a delay. People embrace the possibility, but sure wouldn't bet on that, and I think for most it's still full steam ahead for 1 July. And if anything else comes up, well, that makes life easier perhaps, but it's certainly not to be banked on. I think, to pick up a point you made there, Stanley, talking about the IT implementation strategies, that does have a lead time. Perhaps, Jean-Francois, one will point at you here. Many organisations are moving from what we consider the impact assessments, so kind of the what is FATCA, to implementing solutions. So going from what to how they're going to do it. Many decisions in that, obviously. I guess one of the key ones is between in-house builds versus third-party vendor selections. I appreciate you've probably done a bit of both within Amundi. Just be interesting to hear about your decision process in choosing how and what to implement, perhaps.
Yeah. First, we have to say that asset management company have a kind of particular status around the FATCA issues, because generally speaking, we have no retail direct clients. That make quite easier our backloading and FATCA process around that. Only, if I take as Amundi example, only 3 entities are themselves book of holder. So I will say for all the other entities, we will use TA or trustee, and so we will rely on them. So there's no, I will say, implementation of FATCA solution, also about implementation. So what we probably will make homemade things for the entity we have that they are book of order, and we will rely on agreement with TN trustee for all the other entities. So we will now implement third party for the backloading and the track of US person directly. But as I told you in my presentation, that for every other issue we can have as the 888, we will use some platform to do it, because it's we cannot do it ourselves. I'm not sure, and I'm very clear on that. But
excellent. Thank you, Jean-François. I think that's a good balanced response. I mean, Stanley, how do you see businesses evolving perhaps through your regions, and maybe the answer different in Latin America to Southern US, for example?
Well, I'd like to just comment on the 55% of the folks who are that we're going to spend a rather small amount of money, less than $100,000 for their. I don't know how they're going to afford external solutions, and the smaller banks in the region don't have the ability internally at this point that we've seen to provide their own internal solution. And furthermore, the off-the-shelf solutions that are being offered are lacking a lot of elements. And one of the elements that I keep looking at is the United States underlying regulations, because FATCA implicates the entire Internal Revenue Code at various points. The confidentiality issues in the transmission of data, the safe portal transmissions, and so on, and even where things are being transmitted directly to the U.S. government under an IGA 1A, how does one encrypt or safeguard the data moving from a particular institution onto the IRS platform to prevent data from being somehow exposed to folks that would use it in a way that it's not permitted to be used. So we're seeing that the local institutions in the Caribbean and Latin America, the smaller ones in particular, the medium size, are struggling with this issue. And they're finding that they aren't getting solutions that are comfortable for them. I'm not exactly sure how they're going to do it yet. We've been interviewing a large number of firms that have come to us, and so far we haven't seen a solution that makes us comfortable for purposes of protecting the confidentiality of the data.
Thanks, Stanley. I think the point you make there, going back to the budget, is quite an interesting one. I think there was also the point there that one of the issues to full compliance was internal resource. So you can make a parallel perhaps between those two statements there. But it's an excellent point to pick up, and I think where budgets are limited, compliance does become necessarily quite difficult there. I mean, Tom, just to round off that answer, any other perspective from the UK, Europe perhaps?
Yeah, I think in the UK and perhaps in Europe, because the UK has been the furthest ahead in terms of releasing guidance, and that's been used as a proxy by many jurisdictions who've signed an IGA, that perhaps it's been slightly easier to say, look, this is a significant obligation for us. In addition, we have UK FATCA that's been implemented, and many of the noises around the OECD G20 agenda is being pushed by European countries because of their concerns around tax evasion and clamping down on so-called tax havens. So perhaps getting through budgets has been a little bit more straightforward to actually identify with senior stakeholders that the reputational issues of non-compliance are so significant, and in the current environment we operate in, that is quite a powerful tool with which to get budgets. But certainly they are budgeting for FATCA compliance, and perhaps we need to look further ahead as well and look at where the G20 and OECD are going.
I think the point of reputational risk there is an interesting one as well. I mean, there's one person on the panel here, Jean-François, who's been through the business case process with Amundi. Jean-François, perhaps you've got some hints there for others on the webinar as to what sold it to your board, perhaps. What were the key points that gave the FATCA investment and gave you the ability to move so far ahead with your program?
I didn't catch you completely. Sorry, you can repeat?
Yes, perhaps just the key messages that you use to sell FATCA investments to your board or to your investment committee. So what made them part with the dollars for you to go ahead with the program, perhaps?
No, the key investments are clearly on tax advice, in fact. So it's more intellectual property as investment more than tools and process.
Sure.
The guide that we have is to ensure that we are able to treat our mass because we have significant number of funds. So they are sensitive to the fact that we need to treat all our funds the same way at the same time. So the investments are all around that. That's the reason we have to invest on tax advice to ensure our program is compliant and is okay for all.
Okay, thank you. I think some great perspectives there. I think if we look at perhaps some of the issues that Stanley was raising, this comes back to a couple of the questions we've had raised through the chat facility as well. Tom alluded to this too. There's a lot of complexity there in FATCA reporting through the OECD, through the UK son of FATCA, through what we saw the Dutch government doing with Curaçao and some of the Dutch offshore possessions, perhaps. How are businesses beginning to manage this complexity? And I think let's look to perhaps Stanley for a view from how this is happening Caribbean, perhaps, where you've got places like BVI and Cayman complying with both UK and US FATCA. And maybe a view from Tom after on the regulators and how HMRC and the OECD are combining forces, perhaps, if indeed they are. So, Mr. Stanley, first of all, perhaps, complying with two similar but not identical sets of regulations, it must be a challenge for your clients.
Well, on the Latin American side, outside of the Caribbean, where we don't have the UK structure in place, they're not even looking. They have a very, very narrow view. You could view them as racehorses with blinders on, getting ready to come out of the chute. They're only interested in the U.S. at this point. In the Caribbean countries where I've visited, I'll give you such as Haiti. They're sort of deer caught in the headlights, I guess, of a car, as we say in the United States. They know they have to comply. They haven't figured out how they're going to comply. There are political pressures all over Latin America with respect to worrying about reciprocal reporting. And so now when we come to the idea of using Grand Cayman or the BVI as an example, having to comply with both the U.S. and the U.K., one of the things that happens, at least with the IGA Model 1, 1A, which is reciprocal, and some of the others are some of the annex benefits that these countries get. If one country is able to negotiate something that's a little more beneficial for its own use, other countries are able to pick up and do the same thing. So if there's any way to sort of overlap the two, or for example, if one were to compare the UK with the United States IGA, and if the UK has been able to negotiate a specific thing with the US that might be beneficial for it and its co-partners on its side, then the other countries would be able to use that for their own benefit and for their own simplification. When we were talking about waiting for governments and government guidance, the IGAs are pretty clear as to what the countries are supposed to do, what's required of them. There are some issues, there may be some issues locally with respect to the transmissions of data to local governments. And then you have the issue of whether or not the UK is going to ask for additional data, supplementary data, in what format it has to have it. So now we're talking about additional IT complexities, additional IT budget, additional training of human resources in the institutions to determine what exactly they have to collect for their customers, from their customers simultaneously and in the onboarding, and of course during the remediation process for pre-existing accounts. It's going to be an interesting. It's going to be very interesting.
Excellent. I think the word interesting comes up a lot with relation to FATCA programs, and I think it's one of those words that takes on many different meanings depending on the exact inflection. I think interesting in this context means fairly difficult from my sense here. So I'll cut to you for your view as well, but maybe in the context of the polling question we asked, around 30%, 32% of the respondents thought that over time the OECD exchange of information will actually supersede FATCA. So,
yeah,
is that the direction of travel that you see with this?
Yeah, I think that's an interesting question, and certainly one that's come up as part of the HMRC working groups and the OECD working groups looking at this, because effectively the way that the OECD regime will be implemented will be through a series of bilateral agreements. And as I said earlier, there's 40 or so countries that have signed up to that bilateral commitment to enter into those agreements. So I think what we may see is that much of what the OECD is trying to achieve will actually be implemented and supersede some of the agreements, for example, the UK FATCA agreements. Nevertheless, under the US, it is still uncertain about whether, given the US FATCA has withholding, whether that will be ultimately superseded. I think the interesting thing around what the UK is trying to do, for example, under UK FATCA, and where the OECD is going, is that they are focusing on where the individual, the customer and the investor is actually tax resident. So they are looking at not a jurisdiction specific like US FATCA, are you US or not, but actually saying, where are you tax resident? And that's driven the move towards these similar agreed forms, in inverted commas, that people refer to. And when we talk about similar agreed forms, they're not actually agreed by any tax authority necessarily, but they're trying to be jurisdiction specific, so they can cover off the obligations of both US FATCA but also UK FATCA. And then finally what the OECD is trying to do, and that's why many specifically UK institutions are looking at introducing similar agreed forms. I think that trend to looking at some alternative to the W8, W9, irrespective of what we said on the poll questions, will actually start to happen across the world.
And I guess the point there is that W8 is specifically around the US tax system and around treaty benefits, whereas what you're saying is specifically around tax nationality and where you should be tax
residents.
Fundamentally, answering a different question, I think.
Exactly, and just the whole move to, I think, ultimately in 3 to 5 years' time, institutions will have to report on all of their customers and all of their investors and where they are tax resident.
I think the other interesting point you make there, actually, which perhaps we lose sight of sometimes, is that FATCA still does have withholding tax of 30% as the stick, whereas the OECD models perhaps don't have that.
They're very much reporting
rather than tax focused. It's a good distinction, actually, and perhaps one that we should draw out more in the future. We're running, I think, 3 minutes to go, so I think we've got time for 2 more questions. Apologies if we haven't got round to answering questions that you put through the chat functionality, and we will do our best to pick up ones that were raised through that to specific people after the presentations. So if you have submitted questions, we haven't answered them, we will try and get back to you. So 2 questions, I think, to go through, and we focused a lot on the onboarding process. I think, as Tom mentioned earlier, that's by no means the end of FATCA. There's a whole bunch of work on existing customer remediation to do as well. So perhaps, Jean-Francois, it sounds as if you have the onboarding process and the classification, registration very much in hand. Are you looking at the existing book of business and how you begin to deal with that now? I guess that's the next deadline down the track. So Jean-Francois de Amundi, are you focused on this now?
Yeah. In fact, I would say we begin that process from the 1st of January. We decided to anticipate the new KYC process on onboarding new customer. But as I told you, it's, I would say, easier for an asset management company who have institutional customers than a bank who have retail people as customer by definition. So we decided to implement that. We will rely we really hope that the AA8 BEN-E comes very, very quickly now, because we want to use mainly largely that formula for our customer and rely on, in fact.
Yes. Now, that's a question that was raised multiple times through the chat functionality. When do we expect the new W8 BEN-E to be finalised? Hand on heart, I don't know. I don't know if anyone here is prepared to give an opinion. Perhaps, Tom, have you got
Look, the IRS went out to consultation on the W8 BEN-Es, and just before Christmas, that consultation closed. I know a number of institutions and associations were looking to put in replies, and whether the US should actually make them more less US focused. I think the focus of the US very much is getting out the next version of the US regs, in addition to the forms. So hopefully they will come in quick succession.
I like that, yes, in quick succession. And Stanley, you were at the conference last week, you said, did you hear anything from the IRS representatives there that suggested we might see them imminently in the next couple of weeks, perhaps?
Could you repeat the question? It didn't come across clearly.
Sorry, so the question on W8 BEN-Es, did you hear any indication of when they may be finalised from your IRS contact?
I have to chuckle. Not really, but I just wanted to comment on one other thing. There's a whole new, for U.S. institutions at least, there's a whole new set of what we've been calling onboarding data coming out. The Financial Crime Center of the United States has issued some proposed regulations and standards recently that's causing a buzz on this side, and what they're doing is looking for enhanced due diligence and customer due diligence and onboarding. And well, the reason I'm bringing this up is because FATCA is specifically mentioned in this particular new reg, which is designed to prevent the laundering of money wherever possible. So they seem to be looking at a taxation in sort of an oblique way as a money laundering issue coming from the Financial Crime Center over here. And our institutions are starting to ask questions about this new customer due diligence and onboarding regime that they're going to have to go through.
Excellent, thanks. That's good additional information, actually. And I see we're now at the bottom of the hour, the half hour, so our time for this is now up. Just remains for me to say thank you very much to Tom, to Jean-François and Stanley for all of the incisive and excellent contributions. Also to all of the participants who submitted questions and also answered the polling questions through the webinar. There'll be a follow-up coming out from us on Monday, which I think includes links to the slides, which will also include the polling results as well. So should they be useful for you making business cases or moving the FATCA discussions on, obviously very welcome to use them. And just remains me to say best of luck for you all with your compliance programs, and here's hoping we all hit July the 1st. Thank you for your attendance, and goodbye.
Thank you.